Okay, this is a Saturday morning, and I was spending a lot of the yesterday, Friday, looking at fib retracement plays and how I could creatively come up with a trade plan kind of for at least one trade idea based around Fibonacci levels. So, one of the things I noticed when I was trading 5 minute candles is that let's say you have a nice strong push on a 5 minute candle. It's not that unusual at all for the next candle to retrace to 50% and then there to be a nice move up from there. Usually this happens when you've got a new fresh trend or a new pivot resulting in a strong volume and a fresh direction or a continuation of a strong trending direction. So one of the things I love about trading is that nothing is ever exact. It's more science and art than just science, but the art form of it is how you can creatively apply the science to what you have to work with your drawing board. So as far as the Fibonacci levels go, there's a lot of retracement to 50% and then continuation plays that happen, and this happens in pretty much every time frame. And I think the trick is to find the right time frame, the right time of day, and the right looking kind of patterns to apply this thing. So, for example, this is a 1 hour chart, the most recent 1 hour chart. And if you looked at this retracement here, you could creatively say, well, okay, the bottom of this initial thrust is here, and the top is up here. So, where did price go? Price went to this 0.382 line, or you could look at it and say, okay, I'm not going to count that wick, but I'm going to count here where these bodies, kind of pivot around, and I'm not going to, yeah, you could do that. And then when you look at it, you could say, okay, well, the body of this candle finished, the top of the body finished right at 50%. So that would be a way of kind of, fooling around with it a little bit, but still taking it for a 50% retracement. So that's kind of one example here on a larger time frame on a 1 hour chart. Now, if you were to go ahead and take that out and say, okay, that's great for a 1 hour chart, but how about 1 hour candle itself? Let's take a look at this situation right here, and we're going to say, okay, here's a big push down, and here's a retracement, and then when the pivot begins to happen with this resistance here at this 4 hour cloud and this morning star, then we've got something that is pushing down. So, okay, let's say we want to think, or let's say we want to guess that we want to try to find if this candle the markings on this candle are retraced by 50% and with a nice continuation. Okay, so that's the thesis we're going to be running on here to see if that could be so. So how am I going to do that? I'm just going to do the same thing. We're going to take a fib retracement level. We're going to put the we're going to say that we're going to assume the thesis of this trade is that price is going down. So we're going to try to catch a retracement at the 50% level and take it down to the 1.6221 level. Actually, we're going to try to take it in the zone between the 0.61 and the 50%, and then take it down to the 1.612, I think it is. So we're going to go ahead and get a fib box. We're going to put it on based on the low of the prior candle and the high of the prior candle, which is up here. Okay. And then what we're going to do is we're going to mark these areas out, which I've already done. This is the 0.618 and the 0.50. And then we're going to actually take can I move this? Yeah. I'll move this into that zone just so it's easier to see it. I'm going to lock that in so I can't move it. And so the idea here is that once this 9 o'clock candle completes and the 10 o'clock candle begins, we're going to look to see if we can get a retrace up to this reversal zone and a push back down to the target. So obviously we know it did work, But this is the basis of this trade idea. So if we just want to take it and go to a shorter time frame candle to see how that plays out, we want to be looking at the 10 o'clock hour. It's pretty busy here, so let's maybe take it and look at it on a 5-second chart at 10 o'clock. Okay. So 5-second chart here at 10 o'clock. What we see is this is the demarcation of the 10 o'clock hour. So 10 o'clock hour prices are right about 17,450. It comes up, and if you'll notice, that's one of the things about a 5-second chart is you can see a lot of detail. If you'll notice, there's a pretty long wick here, and it wicks directly, pretty much right to this 50% line, which also happens to coincide with a 5-minute 8 and 9 EMA band. So that's extra resistance right there. So that's pretty good. So assuming that you like that and you say, okay, that's telling me there's strong resistance up here and it's bouncing off of it, you could get short right about here at this level, and you could put your stop up here above the swing high on the prior swing high, okay? And that is 25 points. Now, with 25 points, a 25-pointer gives you 2 contracts, and that's $100 stop. If you're running 2 accounts, 4 contracts, and $200 stop. But it's never more than $100 per contract, per account, I should say. $100 per account, which is only which is 4% of what I have to work with. Okay, so that's the idea is to keep the risk low, but by adding lots and lots of accounts. For example, if you want to put 10 accounts on, let's see, 10 accounts, that's number 26. So if you want to put 10 accounts on, okay, you can, number of contracts would be 20 for 10 accounts, and value would be $1,000 R unit, risk unit, or if you're going to get 2 R out of it, you make $2,000. But you're never still risking. The nice thing about this is that you're never risking more than 4% of your overall max drawdown, or $100 per account. Okay, so you're risking 10 accounts, you're risking $100 per account. It's $1,000 total. So $1,000 for a loss, or in the account value, or you've got $2,000 for a winner if you for total account value of all accounts if you win 2R. So let's go back and take a look at how this played out. So anyway, let's say we're just trading a couple accounts right now. We go ahead and put we've got a 25 point stop, and that's going to be 2 contracts per account, or 4 accounts total. And then we take it down and we mark, the target for this is down here. Okay, so we're going to mark that. That actually happens to be 3.77 R. So that's not a bad win at all if you can get it. And all you had to do is just be patient and wait for it to go down. And these, what I'm finding about these is they hit that target pretty frequently, like very frequently. Like you've got situations where if you've got a decent looking a chart, right? Like this is a decent looking chart because you had a morning start at a major key EMA level here, which was the 4-hour cloud. And then you get a strong push down from that. Okay. So that tells you that maybe, just maybe, you're going to have a continuation play down just because you've got this strong push, a 50% retracement like we showed earlier, and then the beginning of a new, it's like a fresh trend. What you want is to catch it early, but after it's confirmed, right? So that means that's this candle, 10 o'clock candle. And the other thing about catching a 9 o'clock candle, which you could kind of guess and say, okay, I see a morning star. I think it's going to reverse because it's putting in a morning star against a key EMA level, and it wicked above it and wicked below it. The candle got nice and tight, but so did it here, right? And it didn't work out. So what's really good is on the 1-hour chart is if you can get that first big strong push down to confirm the possible new direction. Now you had one here too, right? But it didn't work out. So the thing is that this one was still kind of above. It ended above the 1-hour EMA band, so that's supporting it. So it's tougher for that to go down when it's sitting on top and prove that it held support right? It wicked below it, but it held support. So that one, is not quite as convincing, right? And then if you go to the next one, let's say you did put your fib retrace on this, trying to see if it's going to go down. What would you see? Well, you'd see price, kind of stayed above that 50% level, and it didn't even wick below it. So it was above it the whole time. So you didn't really get that push up and then back test of it. So that's why probably that one wouldn't be good. However, on this one, you've got a strong candle. It's a big red candle. It's a very strong red candle down after that morning star. Yes, it's true. It did end on top of support, but however, it also ended well below its 50% level. And so if it backtests up to the 50% level and continues down, then you can expect maybe you've got some room to work with. And you want that back test and that continuation. Whereas this one, it ended at the 50% level, not below it. And so it had nothing to come up and back test against. I guess that's my point there. So anyway, this is the trade idea, and it's using fib levels, and it also kind of ties in with the EMA clouds as well, which are based on fib levels. So everything's Fibonacci based, but it's kind of combining the clouds with fib retracement levels to find entry points and targets, decent targets. Like for example, this is a 3.77 target. That's pretty good. Like most of my trades have been 1-to-1. So if I could start getting like 2-to-1, 3-to-1, 3.5 to 1, it's going to do wonders for my P&L. I think really, really, really good things. So again, that is the trade idea. Again, here's how it plays out again in real life. This is the demarcation of the 10 o'clock hour. You watch to see if it comes up into the reversal zone. It did, and rejected against the reversal zone, as well as a key fib level, which is the 5-minute 8-9 cloud. You get in here, stop goes above the previous high. The risk is managed well with only a 1/25 or 4% of per account being risked, which is $100. And then you got a target which you're trying to hit down here, which does get hit, and you can see it kind of bounced around that level quite a bit. It didn't really go too much further beyond that target for the rest of the morning, and then I think it took off to the downside again later, but it was a pretty decent target, I think, at 3.77. So again, with I have 18 accounts right now. I have to activate. They'll renew. So basically, $100 times 3.77 is $377. Times 18. You're looking at a win on that one. I can't do math here. Doesn't want to let me do it. Oh, because that's a dollar sign. Probably why. There we go. Yeah, usually it does the math, but I'll just do the math on my calculator. That would be $6,786 for that trade. $6,786. So that's the potential here, because I've actually got the accounts ready to go. I've already bought them, and they're renewing once a month. Right now, I'm just trading 2 performance accounts. So anyway, that's the potential, and that's the potential of one trade. So pretty good. All right, that's the trade idea. I'll let you know how it goes.